This is our Forex blog for September 10th, 2013, and one of the easiest ways of trading is using our currency indexes, which show you what each individual currency is doing: the dollar, the yen, the euro, the pound. I'm showing the top four that most people trade, but we have obviously the Australian, New Zealand, Swiss, and CAD too. You can see what the trend is on the chart. You can see when trend lines get broken. And so for the dollar here, you can see the longer term trend, daily, weekly, monthly trends down. Had a little bit of a pop right here, came down to its hourly moving average and failed to get any kind of a bounce off of that. And so therefore, it's a very high probability place to sell at 8.15 here when the dollar gets weak. All you got to do is find a currency that's strong at that time and likely to go up to trade. Now the yen's also weak. The euro is weak at this time, and the pound also has been going down. So let's take a look at some of the other currencies to find some higher probability trades. Here you can see the Australian extremely strong today. Ideally, if you see a currency like the dollar that looks like it's about to break down and go down, you want to trade it versus a currency that's strong. The Australian is extremely strong. The only problem with this is it's at the upper containment band here. And so it can certainly continue past the upper band, but it's a lower probability trade. But we'll take a look at this one anyway. Here's 8 o'clock. You can see on the chart here, it's right at its high. Goes up a little bit, so you might have made a little bit of money on that trade. You buy the pullback, and you can see it also, went up a little bit more, maybe 20, 30 pips. But when a currency's at these bands, it tends to reverse. So another thing you can do is, when the dollar's appearing to be going down and getting about to break down and going to the downside, you want to trade a currency that maybe is down statistically too far. You're going to get more of a bounce off a currency that's down too much. Oftentimes it returns to its hourly moving average. If this one falls and this goes all the way up to its hourly moving average, you can make 20, 30 pips on a counter trend trade. So here you can see on the chart, that's exactly what happened. The euro was down too much and is very likely to reverse, and it went up 10, 20, 30 or so pips, a little bit of a pullback, and then went up again 10 or so pips. This is a pretty high probability method of trading. You can also spot patterns such as head and shoulders, double tops. Here the market was trending up. You can draw trend lines underneath currencies. Ideally, when a trend line's broken, if the daily, weekly, monthly trend's down, you're going to do better. At 5 o'clock, this one's likely to go down. Which one was strong at the time? Obviously the Australian was one of the stronger ones. So looking for pound Australian. Here's the pound Australian chart. Remember, the pound at 5 o'clock was very likely to go up. Its trend was up. The pound is likely to go down. The Australian strong. You can see coming up at 5 o'clock right here, it breaks down, goes from 69, 65 all the way down to 80. 85 pip drop, pretty much straight down. What other currency is strong? Well, at the time, the dollar is above its hourly moving average, has pulled back a little bit. It looks to be like a 38% Fibonacci pullback. Pretty high probability place to be buying the dollar. And the pound, has been trending up and is likely to pull back. At least on a short-term basis, the pound dollar is likely to go down at 5 o'clock or so. If you look at this chart at 5, you can see the market, did go down in the next 15 minutes, about 10 pips, not a whole lot. And then when this next trend line here got broken, it pulled back 10, 20, 25, 30 pips. And that's oftentimes what happens. The first trade doesn't always work. You might make 3 to 5 pips or lose 5 or 6 pips. A lot of times the second trade works. Let's take a look at some of the other currencies. Let's take a look at the Swiss. Basically, we want to find a currency that's super strong, another one that's weak. This one is trending down, comes back up to its hourly moving average here at 230. So which one do you want to sell against the Swiss? Well, at 230, the dollar breaks out at that exact same time to the upside. It's strong. The Australian is also strong. And so you could trade either of them. You bring up those charts. I'm going to put the dollar Swiss on here. The Swiss is getting really weak. It's very likely to reverse down here coming up to 230. The dollar is breaking out above its hourly moving average. And as you can see, you can get into this trade at a very high probability, very early point. And you can see it goes from 93.25 or so all the way up to 65. It was a 40 pip move. And you know, most of the time you're not going to hold multiple hours like that. You're going to get in, make 10, 15 pips, maybe buy a pullback right here, make 3, buy a pullback here, make 8, buy a pullback here, make 5 or 6, buy this breakout right here, make 15. You're not going to catch every pip. That tends to be how I trade it. If each individual chart on these pullback areas looks like a high probability trade, I will take each of those little trades like that versus getting in and holding them for a long time. That's just my style, but you can certainly get in. And another method is to move your stops up. When it makes a new high and pulls back, you put your stop here. Makes a new high and pulls back, you yank your stop up here. Makes a new high and pulls back, you make your stop here. And you got to have a minimum goal for your trades. If it's 20, 30 pips, or if you draw your fibs on here, the fib targets are up here. At the very minimum, you should get out of half your trade when it hits the fib target, and then kind of trail your stop on the other half. Fib targets are very high probability, and most of the time the markets don't go past the 1.618, as you can see here. So there's many ways to trade these patterns. When you see a resistance area like the previous week's most actively traded price, this is a wonderful area to look for reversals for a counter trend trade, and you want to find a currency that's likely to go up or is also strong at 12:30 coming up to 1. That would probably be the Australian. It has pulled back and found some support. It's extremely strong. It's not at or at its upper containment band, and it has some potential room to run right there. The pound here's this 12.15 area, and you can see you got into that trade, very high probability place, falls 20, 30 pips, very short amount of time, you get short, and it also falls a little bit more. So there's so many ways to use a currency index. It's the easiest way to trade, bar none.